Good morning. This is a sound test. Testing 1, 2, 3. Testing 1, 2, 3. We'll be starting in about 5 minutes. Today's session was originally scheduled for FX Street. However, due to some unforeseen issues, we are now broadcasting on YouTube today. So YouTube today, FX Street will be rescheduled for some other time next month. about 2 minutes, less than 2 minutes to start. All right, and here we go. We're in our live session. Before I start, just a little bit of information on programming notes. Today, I was scheduled to broadcast on FX Street. However, there's been some issues that prevented that, and so I'm on the YouTube channel with Trading with UFOs. I hope that you're able to follow this channel in the recording if you anticipated the FX Street. Wednesday, the 29th of July, today is my last session during the month of July. So we'll get right into what's going on. Every Wednesday at 10 a.m. Vietnam time, I do this live session, trading and nailing FX. And today I'm, as I am on Wednesdays, coming to you from Bien Hoa City in Dong Nai Province, Vietnam, where it is warm, obviously all the time. And I'm broadcasting from the Pegasus Plaza. In London, if you're tuning in there, it's about 4 a.m. In the morning. And in New York, for our East Coast New York traders, the day is 11 p.m. Tuesday night. All right, so and if ever you need to get in touch with me, you want to get some information, you can go to fxopabert@gmail.com, and it's a good idea to send your questions in, and we'll get you responses as quickly as possible. All right, so here is my August schedule, the August nailing FX trading schedule. There will be a slight change in this schedule because of the FX Street session that was missed today. So we'll do that in one of the sessions in August. So next Wednesday, I'm scheduled for FX Street. I think that will happen. So you can go to FX Street and watch these sessions. You should also go to www.tradewithufos.com/OPA and click on the Get Together button at the top of the page. Let's see what we have here. We got, okay. On the top of the page, sign in, costs nothing, and you'll get a complete schedule of all of my sessions as well as the other Nailing FX presenters and the information you'll find on the other asset classes. We do presentations on other asset classes as well. So let's take a look and get started. The disclaimer: the following videos, clips, demonstrations, presenter guides are for educational and instructional purposes only. Tradictive and Trade with UFOs and its presenters provide trading information purely for the purpose of demonstrating a method of using the products. Users understand that all the content used in the information presented is purely for demonstration purposes only, are not instructions to take trades. We never tell you to actually take a trade. That's your decision, and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through any presentation or demonstration does not indicate in any way the results you may receive by using products or methodologies we offer. So with that disclaimer gone, let's get right to it. Today is my 8th session in the Nailing FX series. We're going to do a review of the last session trade. Turned out very well. That last session trade was a US JPY, US yen trade. It was done based on multiple time frames. You'll see that. And the correlation of the data with TradingView. I'll show you how I monitored and managed that trade by moving stops. And then we'll also go ahead and look for some potential trades that I might be able to put on today. So we'll go for some hunting of trades. All right, so here's the trade from last session. Towards the end of last session, we were looking at the daily chart, and over here on the trading view, you see I saw a sell zone, a UFO sell zone, UFO standing for unfilled orders, sell zone here. And so I selected the top of the sell zone, okay, which was about 107.55, 107.55. And let's see what we get here. All right, so 107.55 was the top of the sell zone. I used that as my stop, 107.55. You see, stop loss 107.55. Then I was looking for price, which was down here. You can see price was down below that. I wanted it to go up and hit my limit order. I put a limit order at 107.00. That is a hard number, 107.00, hard number, okay? So again, hard number, psychological number, round number, whatever you want to call it, but that's a significant number, an even 107 number. And so then we were looking at where the target might be, and I put my take profit. Because of this hard number, usually price will move to the next hard number, okay? And so I didn't put it exactly on 106 at the time that I placed the bracket order. A bracket order is all the information is put in. It wasn't executed immediately. Price had to come to my limit. And so I put it 11 pips above the hard number, just to make sure that I would get in. Now, also I could see that the MACD was indicating that price would go to the downside because the MACD was below zero and it was crossing the signal line. So on a daily, it had the potential of popping up. I was hoping for that pop up. Looking at the trading view climate down in this area here, I could see that I was in the first day of a potential 6-day downtrend. Okay, 5.1 rounded up to 6. Okay, so here you see the 106.10. That was the top of this large, very large buy zone. Okay, could have put it all the way down to the UFO. Being as conservative as I am, I put it right at the top here. So that combination of the top of the buy zone and the hard number 106 gave me the impetus to put in the target at 106.10. All right, so that was the setup. Towards the end of the session, those numbers, I read off those numbers. Here you see them. And here we went then to the hourly. That was, here was the daily. The setup was on Wednesday. And then I took a look at it on Friday. You can see here the timestamp here is Friday at 10:30 in the morning. And what did I see? Here was where this shaded yellow oval is where I was looking for price to go up, and price actually did go up. You see here, price did go up sometime later in the day on the 22nd. It did go up. All right, take me in. So I then, the short limit was activated and I was in a short sell. Price continued to move up higher, going against me late on Wednesday and through most of Thursday. Okay, and then price finally didn't reach my stop. My stop was up here at that 107.55 area. Okay, so the 107.55. So I had approximately a 2-to-1 risk reward. I was risking 1 for a gain of 2, just under 2. See, the original bracket order was placed at 107.55. The stop loss moved to 106.85, 15 pips below. So on Friday, when I saw this, this is the time right here, right there. That's for Friday time, 10:30. So I saw that price had not only taken me in, but now I was in a good position where pips were accumulating in my account and I'm going in my direction. And again, remember, I always speak in pips. Don't think about the money. If you're making pips, the money is in your account. So focus on pips, making pips. All right, so down here, this is right here, the Friday indication on the 1-hour chart. And what is it telling me? Well, take a look here. I'm getting these little arrows here. These arrows are basically my alerts that the algorithm is telling me, you know what, there's a possibility. An alert is just a possibility, not a trigger. That there's a possibility that price may want to go up. Looking at the MACD, I can see that the MACD did in fact drop below the 0 line, and it's below the signal line as well, coming down, looks very strong. So I was confident that price would and could move further south, going down short. So at that point, what did I do? I moved my stop loss from the 107.55, moved it down here to this level, So I have a new free trade. At this point, my trade, the worst case scenario would be that I would make approximately 15 pips. Because of the strong move down, I was confident that it would go down to that, continue to move down. All right. So on Friday, you can see this was at about 10:30, 10:34. Then later on Friday at 10:48, about 15 minutes later, I took another quick look and saw that price was continuing to move down. And so there was less possibility in my mind that price would go significantly back up. So at that point, I moved my stop from the 85 level to the 106.70 level. And at 106.70, I had now locked in 30 pips of profit. Okay. I was going for about 90, but now I've already locked in about 1/3 of the pips that I was anticipating, and still had a target down at 106.11. Okay, so next I started to take a look at the 15-minute chart and what was happening on the 15-minute chart. And here you see, here's the new stop loss at 106.70, and here is 10:54, about 10 minutes later. And what do I see? I see that on the MACD, price had pulled back a little bit. That's because of this flat area. But all in all, even on the 15-minute chart, I'm seeing a very positive move to the downside based on the profile. The profile, you can see here, the blue line is my direction, is showing a nice direction to the downside. The red is the street. The street is conforming. I have my guardrail, and then the brown is my median. If I cross over the median, I'm on the wrong side of the trade, right? So I'm looking at all those things, and I can see my target here at 106.11. All right, so that's what I was looking at about 11 o'clock, just a few minutes before 11 on Friday. So then later on Friday at 12:35 here, about 12:30 on Friday, took another look. You notice that I am not sitting and watching the paint dry here, watching these charts. I'm doing other things, come back, take a quick look, see if there's anything I need to do. And so what I saw here was that price was flattening out and pulling back slightly on this, still showing strength to the downside, but my profile was basically squashed up. No, it's not as nice and clean as you see an hour and a half before. So that gives me an indication that price may want to start pulling back. And again, my belief is that when the pips are in my account, they are my pips. And I'm very stingy about giving back a lot of pips. So at that point, at 12:35, about 12:30 Friday afternoon, I decided, well, you know what? I'm going to lock in another 10 pips. So at that point, I moved my stop to 106.60, locking in another 10 pips. So now I've got 40 pips, almost half of my target in the bank, so to speak. So worst case scenario, if it comes back, takes me out, all right, I will still make 40 pips on the trade, which is, to me, a good trade, knowing that at some time in the future, I will probably show you that if you can make 20 pips a day on average, you can trade and make a good amount of return based on consistently knowing how to grab 20 pips. 20 pips on a daily basis is all you need. And if you get to be a really good pip pip trader, so to speak, locking in 20 pips every day, you don't have to go for the big moves. You can get 20. All right, so let's continue here. So here we can see that at 2 o'clock, almost 2:30, right, I still had my stop loss down here. Went back and looked at the hourly chart again. Looking back at the hourly chart, the 15-minute chart showed me this little pullback here. The hourly chart continued to show me strength to the downside. So based on the hourly chart showing strength to the downside, now what I did was I changed my target, my profit target, my target profit. It should be PT, I guess, or take profit. I changed that to the hard number 106. So now I was anticipating that price would actually pull down and maybe make it to the 106, giving me 100 pips as a result of this trade. I had already locked in. Here you can see I now moved my stop to 106.40, which means that I've locked in from 107, 60 pips, 2/3 of my original target is locked in the bank, so to speak. And so I am looking at keeping that amount. All right, so a little while later, about 15 minutes later, I took a quick look and I wanted to see what was happening. So now as I'm getting very close to my target, I'm, I don't want to lose that much. I don't want to give back. Again, I'm very stingy on giving back money to the market. Once the market has given me the pips, they are mine. They are mine. I'll share a few back, but my initial movement would always be to go to a free trade, just to make sure that I'm good on a free trade. And if you get stopped out on a free trade early, and then price moves back into your direction, there's no reason why you can't get back into the trade. Okay, many times you can get stopped out on a free trade for 5 or 10 pips, and then price will turn around and do what you had anticipated right from the beginning. And so you can get back in sometimes at a better price, since price has moved against you. You can get in at a better price or at the same price that you originally anticipated the move. So there's nothing wrong with setting up and getting into a free trade once price has moved significantly, depending on how many pips you're going for, and that's what we do. That's what I do. Okay, so now I'm looking at a 5-minute chart. And what I'm seeing on the 5-minute chart is that price is starting to flatten out on the 5-minute chart. And so I'm getting a little concerned that, okay, it's moved quite a bit. It has the potential for pulling back. So I added another 5 pips to my bank. So I moved my stop loss to 106.35. I still have the take profit at 106 down here. And I'm seeing on the 5-minute chart that price still shows strength to the downside. All right. All along on all of these time frames, multiple time frames, I continue to see little alerts, these alerts telling me that as far as the algorithm is concerned, there are things happening. Now, these alerts that I see on the MT4 are the same alerts that you see in TradingView, the phase, okay? Those phase alerts, okay? So what happens with those is, that when we get an alert, what we look for is a confirmation of the alert. So a confirmation of the alert, this alert is a buy alert. I would be looking for a subsequent close above the high of the buy alert. That would be the confirmation of that alert. And then I would also be looking at the profile. Is the profile giving me some indication that price is going to change, as well as looking at the MACD? So those are the things that I'm looking for. All right, so now let's take a look and see what happened. This is the final result. So Friday, I looked at it, as I said here, at about 3 o'clock in the afternoon, just before 3 o'clock, made my changes, and then I was done on Friday. Okay, done on Friday. So when I looked at it again to see what happened on Monday, this is Monday, right? Here's my timestamp for Monday. Looking at the hourly, back here, this was the 22nd. The starting time, here's where we got in. I got in, looking for it to go up, got the entry, came down, finally put the up in here when price was moving sideways here, a little bit of concern. Move my stop to 106.35 down here. Price then did in fact on Friday pull back and hit my stop. Unfortunately, it did pull back, hit my stop, so I was stopped out with 65 pips of profit. Okay, 65 pips in the bank, which is about 2/3. It's about 70% of my original target. Good trade as far as I'm concerned, very good trade. However, we see here that price went sideways after the stop and then dropped significantly on Friday, going through the 106 hard number, okay, which I had moved down, and then pulled back on the 106 and dropped again. Probably going, I haven't checked it today, but it probably would have gone down to 105. It was very close to, you can see down here, 105.39. So moving in increments of 100 and the hard numbers. So the hard numbers are basically the full number, 106, like this. The next hard number up would be 106.250, 500, 106.750, and then 107. Okay, so those are the hard numbers. As price breaks those hard number levels, it's not uncommon, it's not absolute, but it's not uncommon for price to go to the next hard number level. So we talked about hard numbers in one of the previous sessions, so this is just a little bit of review on the hard numbers. So the final result was that we had the entry minus the stop loss, gave me 65 pips. Nice trade, good trade, taken to a good level. Had we not moved the stop so much, maybe we could have gotten more out of this trade. It's a 50-50 chance. Sometimes it'll do this, sometimes it'll go back. You never know. So it's a matter of how you want to proceed with your trades. You have to monitor and manage your trades. And as I showed you here, I'm not sitting in front of the computer for hours on end watching the paint dry as price moves. That will only cause you more confusion. So we're now going to go ahead and see if we can find a trade. I'm going to throw in a couple of other items here that we'll address significantly more in future sessions. But what I'll do on today, if we find a trade, once I get that trade set up, I'll go to the free trade, maybe move the stop slightly beyond the free trade, but give it more room so that we'll see that maybe price will hit our far out target, or come back and take more. So we'll see. Never know how the market will work. So now let's go ahead and start hunting for our trades. We're going to do the trade analysis. All right, so let me bring this down, get rid of that. And let's first bring up the trading view. Okay, trading view chart, Euro US dollar. And what is happening on the Euro US dollar? So here you see the auto phase, these auto phase arrows. Those arrows match up with the alert arrows that I use on the MT4. Okay, so the auto phase and the alert arrows on the trading view, they stay on MT4. The ones that are no longer probable will disappear. Okay, they get removed. All right, so what do I have here? All right, so what I'm seeing here on the daily chart, I'm looking at the daily, starting at the high time frame here. Daily chart. Whoops. What's happening here? Where's my cursor? There we go. All right. So we see that I have an auto phase 2 days ago telling me the algorithm thinks that we are in a position where there is a possibility that price will start to move down. All right. So remember, that's just an alert. That's not a trigger. It's not a trigger. And what I see here on the trading view chart is I see here is a UFO, unfilled orders, sell zone, okay, right up in here. So there's a possibility that price will, there we go, price will go up and hit this zone, okay, and then come down and hit this buy zone down below here, okay? So that looks like a pretty good possibility. The one problem with this right now is that the strength, the continuous move to the upside has been very much overextended when we look at the auto climate. Back here, you see this is where the auto climate first indicated that there is a likelihood that price was going to move up. Okay, so it changed color from this small red dot to this large blue dot, having this spike as well. So at that point, it said that we should anticipate that price would probably move up for the next 5 days. So we always round up to the next highest number. So it was 4.73. We are at the 18th period since that dot. So if you count these, there should be 18 there. Okay? So we're very, very much overextended. Is there a possibility that price will continue to get up here? Yeah, there's a possibility. Remember, we're looking at a daily chart. Do I think that it's going to happen today? I'm not too sure that it's going to happen today. That's a pretty long move. That's a pretty big move from 107, 1.173 up to 1891. That's a big move. Let's measure it. We go over here, take the measuring tool, and see from our current price, probably here, and measure up. So it has to move 162 pips in order to get taken in at that level. Okay. Now, if it goes up 162 pips, how many pips of risk are we willing to take? That's this zone here. So again, let's measure the risk. Coming up here. The risk is 100, say 105. So 105. Now, from this point here down to this, that's 273. So that's a better than 2 to 1. It's about a 2.5 to 1 risk reward. Risk 100, 105 to gain 262. However, can it really go up this high before it pulls back? And remember that as price continues to move, the moving average will adjust as it moves. The repaint, the profile doesn't repaint, but it will take every day's new data and draw the lines in appropriately. So there's a little bit of concern. Let's take a look and see what that looks like on the MT4. So here we see the MT4, exactly the same. You see here is my alert indication on the MT4, and notice that my spread is 0. So I'm not paying any pips or any points, no pips to get into this trade because I am using a pro account here. It is a demo, but it's a pro account where I'm getting the data based on the live streams from the banks that the broker is using. Now, the broker will charge a commission based on the fact that there's no pips. So here you can see it's moved to 1 pip, okay? So I'm sorry, not 1 pip, 1 point. So that's 1/10 of a pip. And usually the combination of points and commission will be less than the spread on a standard account. All right, so what am I looking at here? I'm seeing that even though price has pulled back these couple of days, my MACD is continuing to show strength. Okay, I've got this MACD over the signal line, and I've got this little blue indicator to help me identify that it is continuing to go up. If I put on a measurement, taking the high, the last high of the MACD, and bringing it across, okay, I can see that there is no divergence. There is no divergence. The MACD is, in fact, agreeing with price, with the profile, saying that price could continue to move to the upside. So, with that in mind, the only hesitation that we have here is looking at the climate. Now, whoops, something happened here. Looking at the climate, we can see that there may be a change. If this pulls back enough, the climate may turn red and then go back to blue, which would be something that we would anticipate. So let's go ahead and take a look and see if we can adjust this trade. Let's look down now at the 4-hour chart. Okay. Now on the 4-hour chart, here is some information that you haven't seen before. I am showing here on the 4-hour chart, these are the alerts, these arrows that are pointing up and down. I've got a red arrow pointing down here. Somewhere back here, I'm sure that there is a green arrow. Here you see that green arrow pointing up. Remember, those are the alerts. Now these arrows that are showing to the horizontal, those are entries, stop and entry arrows. Okay, see if I can get a name on it. That's my indicator 62. Well, anyways, so what I do is I'm looking for this. All right, so let's see. We had this on the daily chart. I'm on the hourly end, aren't I? So let's go ahead back to the daily, because I have only verified this on the daily. I haven't verified it in the lower time frames. So here we can see I've got an indicator that's basically telling me that at this point, if I go short, price should come back up and break this level. So it's kind of a breakout. And so what I do is take this level and go over, and where did price break that level? See here, looking here, go across here, it broke that level there. My profile is 100% to the upside, strong, showing that price should continue to move up. And I look down at my MACD. Now, the secret for the MACD is I want to match this up. Let me put a vertical line here. All right, I want to match this up at the end of the day, remember, end of day, this is all daily end of day. I want to see this match up with the profile, and I want it to be on the second move. So that you see these blue triangles, I had a red triangle, then I had a blue, and then a second blue. So I want it to be exactly that sequence. I want it to be red, blue, blue. And when that matches up, that is the ultimate confirmation. So I'm going to be entering on that day my stop. You have to decide where you want your stop. Your stop could be down at the last pivot. Okay. Your stop could be at one of the profile lines. probably probably looking at the median line, the brown median line would be a good one. That's up to you. But whatever your stop is, you're going to want to probably target at least 1-to-1. I will tell you this, the results that I have found through back testing is that it's very unusual not to get at least 30 to 50 pips out of this type of trade. Now, I haven't explained everything completely, what this all is, but I will do that in the future. And so let's go ahead and take a look at another one of these trades here. I can see that I've got, again, this trade tells me price wants to move to the downside, and it was pierced, that level was pierced here. And so I look down. First of all, I see that the profile is indicating that the price has continuous strength to the upside. And when I look down at the MACD, I can see that I have not gone to the second triangle, the second red. It's hitting on the first. So it does not meet my criteria. It does not meet the absolute rules that established for this trade on the daily charts. Now, if you, I haven't, like I said, I haven't tested this out for lower time frames, but it seems to be very, very reliable on a daily chart. Let's go back here, take a look at this one. And what did we see here? We see here, now here I'm looking at a very strong on the daily, very, very strong profile to the upside. I'm looking down at the MACD, and the MACD shows a lot of strength, but I am not looking at the second blue diamond. Okay, now I have to make a decision. Do I want to take this trade based on the overall strength that I see here on the daily chart? And I would want to take a look back also at the trading view and see what the trading view looks like at that point. But there's a good chance that this would be a good trade. And in fact, if I got in at the end of the day, so early in the next trading day, getting in one day, it moved 108 pips to the stop. Again, you can target whatever amount you want. If you had gone down to here, you're looking at 270 pips. Doesn't make 270 pips. Eventually, yes. It today is up at 460, 485 actually right now. All right. So, but that is a long period of time. We are looking at 40 days, a month and a half there of trading. Okay. So those are the things that you're looking for. You have to decide how big your stop loss is going to be. And again, you can use a large stop loss, target a less than the stop loss. Not the best idea, but with the reliability of this technique, it's something that you might want to consider. Or you might say, I'm going to use a fixed stop loss of 50 pips or 100 pips and go for 100. And as soon as it crosses 35 or 40, go to your free trade, move to the free trade and lock in 5 or 10 pips and then let it run. You know what? I actually forgot. I'm just remembering that I forgot to indicate to you that on Friday last week, when I set up that trade, let me see if I can get back to that. I actually I forgot to mention this, so I want to bring it back up before. Okay, here you can see when I switched the trade last week to the 106.35, the 106.35, I then applied a 15 pip trailing stop. And that's why I just put that 15 pip trailing stop. I wasn't going to give back more than 15 pips and let it run. And that's when it stopped me out. So I applied the 15 pip trailing stop. Now we never apply a trailing stop until you have significant pips already accumulated. So don't try to put on a trailing stop early in your trade, because the likelihood is that you will get stopped out and then the trade will continue in your favor. All right. So just because you go into a free trade doesn't mean you should start using a trailing stop. Okay. So I did apply that trailing stop, and I failed to mention that earlier when we were talking about it. So let's see here. What happened? You are not looking at my screen. I don't know why that is, but looks like the screen froze somewhere in here on the recording. Oh, damn.